welcome to Taking Stock, the show where we take stock of the week gone by on Dalal Street and, of course, try and prep you up for what lies ahead. I'm Surabhi Upadhyay, and with me is Nigel D'Souza. Nigel, I think a lot of bulls are going to say, thank God it's Friday, and what a way to sort of, end the week gone by. Because after, the series of days of being absolutely range-bound, finally, at least the end of the week provided some steam, some impetus, and momentum across the board, banks, mid-caps, metal, IT. It was looking quite good, at least when the week ended.
Absolutely, Surabhi. If you just take a look at it for the last series, people were mourning and they were saying, well, we haven't had such a bad series all the way since 2008. But good to see at least, the start of the new series was on a positive note. And that's really been the trend. In the last three series, if you take a look at it, the weakest series that we've had, well, in fact, we have seen cuts of around 700 points. We've seen cuts of around 1,400 points as well in the past. But we come back strongly on the first day of the next series. So that's just a historic data point that I thought I'll pull up for you. The important part is the Nifty is defending the recent low that we have seen. The recent low is roughly around the 10,276 odd. And on a closing basis for the week, we defended the 100 DMA. So technicals as well coming into play here. And maybe there could be some stream all the way till around, the 10,600 odd mark. That's important because that's where the 50 DMA comes. The week gone by, plenty of opportunities to make money. Well, you'll say the Nifty ended flattish, but IT, it made a bit of a comeback. For the week itself, it ended on a more or less somber note, but otherwise it did quite well. And from the broader markets, plenty of opportunity to make money. IDBI Bank, people are talking about, there could be some stake that's sold to a PE. Fortis Healthcare, that's been all over the place. And MINDTREE, that stock's done quite well. 15% returns is what you've seen in the past week itself. Some stocks that people don't really want to touch, anything to do with PSU banking stocks as well as jewelers. You have seen that play out in the last couple of weeks. Even the week that gone by, we did see that PNB continue to be sold into PC jewelers as well to get a knock, and Gitanshi Gems as well was under some pressure.
Absolutely. So those were really the movers and shakers. And in fact, if you're talking about the absolute point move, Friday was the best day that we had since the 6th of February. Where that's when sort of, we were in the bottom of the global volatility as well. We will be discussing all of these cues and more with our guests on the show. Joining in now is Ajay Srivastava of Dimensions Corporate Financial Services. Ajay, great to be chatting with you as always. At the end of Friday, a lot of people are going to be asking this question. Is it over? Is this rally resuming? Can I get back to my buying ways? What's your sense?
Well, I guess the answer is all of three. I think we were in oversold territory. There was a lot of people sitting on the sidelines, a lot of skepticism. It always happens at the end of a very bad period. You have a relief rally of this kind. But one thing very qualitative different today in the rally has been that the names has been a quality rally. If you even look at the mid-cap stocks, it has been a quality mid-cap stock which have made a comeback. Marginal mid-cap stocks have not made a comeback. If you look at the large cap, the performing large caps have come back. Some of them laggards have not come back. So I think it's as we unfold, as the market unfolds, the choice of investment starts to narrow down dramatically. And number two, it will become much more stock specific because with the macros being where they are today, we all know about the macros, we can discuss it, but we know that it's not in the best of pink of health. Interest rates are rising. We will see more and more gravitation towards lesser number of stocks which will dictate the rally than a broad-based buying which was predominant in the last 2 years or so. So I think this is going to get a lot more stock specific. Index will not tell the whole story. Index may say that the cut was 5%, but more portfolios would have seen a red of about 10 to 15 or minimum 20%. That's kind of the cuts we saw in the last month. I think here we'll again see the fact that broad market will kind of trail stock specific investments.
All right, Ajay, that point's well taken there, and I just want to take that point forward. Do you think that in fact there could be some lightening of mid caps and that money moves into large caps? And the second part I want to ask you is, what kind of cash levels were you all sitting at when the Nifty was above that 11,000 mark, and have you all deployed some cash in the market in this 500-800 point fall that we saw?
Well, the cash levels were low. That's the unfortunate part. So one of the reasons I think for the fall was that literally everybody was almost fully invested. So I will not be sage by saying that we had huge cash levels. Some have been deployed, but not significantly. But by and large, we all walked into this New Year's into a largely invested position, which is why bargain hunting was not as enthusiastic as we should have expected because people didn't have enough money. Today was some sort of buying which took place, but not the magnitude one sees after a fall of this kind. So in terms of cash, I think not only us, by and large, the whole market was kind of fully invested, which is why the rally has been slow and tepid. If it was a situation where people had sold off quite a bit and kept cash for buying again, you would see much greater rally. But I think what's happened today is a little bit of confidence come to the market that it may be okay to, just dip your toes again in the market, add to your positions. What has happened in the last 2 weeks, 3 weeks was hold off, everything was on a standstill, no buying, only selling. But now I think we will see certain change taking place to say, okay, selling is over, should we start little buying? I think that's a qualitative difference. But I don't think so. Sentimentally, I think market has taken a huge hit, and I think that will take a little while for it to recover from.
Okay, take your point there. And of course, we're entering the month of March, so that LTCG adjustment, if it has to happen, maybe that's an overhang. But the other talking point, Ajay, has been the role of IT and whether IT can really be a leader and can really carry the index with it. What's your sense? What did you think of this IT rally?
See, the IT, unfortunately, IT's weightage is so low that it can't carry the index anywhere. So be to the point that even if it outperforms all other stocks to the extent that it can't do much to the index, which is why I said, and even in IT, if you see the big performance has come from the mid-cap IT space that, I wouldn't call Tech Mahindra mid-cap, but Tech Mahindra, the L&T Infotech Services, these MINDTREE you mentioned just now, Nigel mentioned, I think, these have stolen the thunder away. If you look at what happened between Infosys, Wipro and TCS, it's been pretty mild recovery at the end of the day. But these are the four non-index stocks which have really taken the IT rally to a new level this point of time. So that's why I said, index will not show us what the underlying market is going to do now, which is stock specific. Lots of non-index stocks are going to outperform, and if you don't have them in the portfolio, you will find your portfolio lagging the index. So large ITs, I don't think so will carry this rally forward. Mid-cap ITs will support a rally to the extent of giving confidence to people to buy into.
Well, Ajay, close to a decade ago, we had that entire Satyam fiasco that played out. And after that, we saw some money move towards, a part of deployment went to other IT stocks. This time around, we have a PSU banking crisis that's playing out, at least in the near term. Do you see more money being deployed towards maybe the private banks? And in terms of jewelry companies, do you see maybe a potential beneficiary could be a KHAITAN? Do you see that kind of a situation play out?
Of course, yes. And I keep saying that private banks is a story which you have not bought into, buy it. If you got it, add on to it. Every correction is a response. PSU bank story is a slippery slope to nowhere. I think it's an MTNL story. If people who don't understand MTNL or BSNL, a lot of people may not even heard of those two companies. I guess your younger audience may not have heard of it. They were the behemoths, they were the monopolists, right? They don't exist anymore, or exist in a form which only serve the government of India with nothing. PSU banks are headed that way unless at some point of time they get sold. I think that's the only solution. So yes, you should move capital. If you don't have, invest in private banks. If you look at just forecast this financial scenario 3 years or even 1 year down the line, okay, where do you put your money in the bank with the safety? You need to go to a Kotak or an HDFC bank, etc. Because there are only two banks left. Maybe a Yes Bank comes in the middle and Indus to some extent, 4 banks. Think about India, 4 banks. You would not like to be with ICICI Bank or an Axis Bank, the whole background. Yes, Axis Bank has got capital from Bain Capital, but that's all about it. You saw the new one, somebody resigning senior management. Those institutions are in a different league altogether to risk your money in. So we have a scenario where 4 or 5 large banks are literally going to control the banking of this country, and you want to be part of those 4 or 5 banks. So I think even in the private banking space, focus on these 4 or 5 banks, focus on 2 or 3 banks which might get sold. Why it might get sold? I think they will get sold, which is the DCBs of the world, the Federal of the world, the Vilas of the world. I don't think they can survive on their own because people will not put money in those banks easily given what's happening around PNB scenario. So I think private banks, but in private banks, focus on top 4 or 5 only. Do not fritter away money to the other banks because you won't get a return. You saw the ICICI Bank's return over the last 3 years. Stock price has not worked at all. As so is Axis Bank, just not worked at all. It had it bump up with the investment. It's come back right back to 540s or thereabouts. So I think even in private banks, focus there, focus on 4 or 5. and be there and keep adding. I think that's my recommendation. Be there and keep adding.
Well, Ajay, you're making that point about MTNL. I remember, maybe around 10 years ago, people used to talk about the copper wires. They used to talk about the big land balance. And we know, what? It's a market capitalization of around 1,450 crores. That equals to the interest that they paid should be in FY17 itself. So, I would totally take that point about MTNL.
Maybe there's some land somewhere where those cables and wires are. But, Ajay, final thought, and you were just talking about, buying out some of perhaps the bank M&A candidates, but that's the other real trade that's playing out, right? You look for companies where there's stress, or whether there's a promoter exit happening, or whether there are IBC cases, and then, people are trying to play that spin, whether it's Bhushan, whether it's JP, whether it's Fortis now. Your thoughts on this trade and whether this makes sense?
I think it makes a lot of sense, and I think that's a good arbitrage story playing out in all the things, whether it's Amtech, whether it's Bhushan, whether it is Fortis is a little different animal altogether, because I'm not even sure what it actually owns, because what I understand of the Fortis Healthcare is they didn't really own the land on which the hospitals are built. All right, those lands were taken away by the promoter, and then he's trying to put it back, etc. So I think it's a little messy story, which is why perhaps it's undervalued to a large extent. It's got a market cap about 7,000 crores. It's got a pretty decent base of hospital plus the diagnostics. So I would put Fortis as a pure blind gamble if you want to invest. I don't think there is anything more to Fortis, because you don't have enough information about Fortis Healthcare. Escorts is in a big legal tangle with the Delhi government. You all know the largest hospital of Fortis is in a huge legal tangle with Delhi government itself. So we don't know where it's going to end up. So Fortis is gamble, is not investment. I think others are reasonable investments where you can figure it out that somebody takes it over, you could get good value for money. So having said that, keep it a small part of the portfolio, because we don't know how NCLT works out, what challenges come through it. We have NCLT, then NCLAT, then you have Supreme Court on top of it. So this resolution plan may take a while to come through in real term for equity investors. Of course, stories like SpiceJet worked so well for people. So remembering SpiceJet, I think it could be worth a gamble to put some money in these companies on a reasonable investment basis. Fortis, gamble your money if you want to, but could give you mega returns, could lose money, we don't know anyways. So that's the story of all the restructuring candidates.
Okay, all right. Well, interesting times we live in, Ajay. Thank you very much for being with us on Taking Stock this week. You have a great weekend. We will catch up with you again soon. Well, on that note, we have to take a break. As we do that, we will leave you with a cross-section of market views that we picked up during the course of the week. One clear outlier that we are seeing is the tech sector. More mid-caps than large caps. I think the earnings momentum is starting to pick up over there. The environment, even on the macro, is incrementally positive. The smaller companies are more nimble-footed, able to do changes quicker than the larger ones. They're able to take advantage of the newer areas of technology. So my sense is that tech would be an outlier this year, especially in the backdrop. If you see rupee depreciating further, that also is a tailwind for tech. But I think from a fundamental perspective, tech actually would be a clear outlier for the year. I would not actually call for an all-out sectoral approach, but I think the approach towards investing in this year would be defensive, move back to safety. Large caps selectively will outperform the mid caps. That's the sense that we're getting.
I think we will finally see a year of double-digit earnings growth. We're not as optimistic as 22%. We're penciling in a 15% growth, the index level for FY19. We think that itself is a significant jump over the mid-single digits, or perhaps even lesser, that we've seen over the last 3-4 years. So yes, certainly we are on an upward trend in terms of earnings recovery, and Q3 has really given us an indication that earnings growth has bottomed out for several sectors. If the dollar continues to appreciate, IT might come back to contributing to the earnings growth of the index levels.
And I believe that the benefits that the reforms already implemented have had on the society as a whole will be reinforcing the need for more such reforms. So we're very positive about India, as you know. We think India is now on the takeoff stage and will probably surpass China in terms of growth going forward.
India has been such a tremendous performer, not just last year, but really since 2013. There's probably a bit of indigestion out there in the sense that the market valuations have run ahead. The corporate earnings results have just been okay. The profit cycle hasn't turned up in the way that it really should at this stage in the economic cycle, and that's probably giving people a bit of pause for thought. We in our strategy report at the end of the year, for the first time since 2013, downgraded India from overweight to neutral, purely on a cyclical basis for 2018. So the underperformance, I think, was predictable, but as much because the outperformance has just been phenomenal for the last few years.
Welcome back. You're still with us on Taking Stock. Now, joining us to run us through all the trading queries and how is market set up, we have Ashwini Gujral with his view on the technicals for next week. Hi, Ashwini. Your take? I mean, it was a rather flattish week, but we ended virtually with some good gains. Does the Nifty look like it's good for more? What do you make of it?
It can rally some more, but the first port of call is 10,600, 650. On the Bank Nifty, you could even have a 1,000-point rally, and that would still qualify as a pullback. So that way, we have turned, at least temporary. Whether this develops into something larger, that we'll have to wait and see. But for the moment, I think next 3-4 sessions should be higher.
Okay, Ashwini, let's get some trading picks going then. Ideas for next week?
See, for next week, I think metals will see more action. So Tata Steel is a buy with a stop of 660, target of 695. MINDTREE is a buy with a stop of 800, target of 845. And RADICO KHAITAN is a buy with a stop of 348, target of 370.
Okay, all right. We've got some questions coming your way, Ashwini, queries from our viewers on social media. So picking up some of them, Dhruva has a question on Eicher Motors. He has 400 shares, bought them at a price of 30,000 rupees, wants to know whether he should sell out, whether he should book his losses. He says he has a long-term actually time frame, 1 to 2 years. Of course, Eicher hasn't had a great ride in the last few weeks. So what's the sense now, Ashwini?
The problem is that Eicher did very well in the first phase of the bull market, which is generally the consumption, and autos generally begin all bull markets. Now it's in a correction. I mean, 30,000 was not the greatest price to buy it for the long term. Now that you have bought it, maybe average out. That should be the best course of action, but you'll have to stay with it if you want to make money. Otherwise, taking a loss does not help. It's a good stock. It'll probably finally still make new highs, but you'll have to accumulate at these lower regions so that when the run starts, you are still in.
Okay, all right. So that's the call coming in on Eicher Motors. But we have another query coming in from Rajesh Patil. He has 1,000 shares of GIC Housing. The buy price is at around 470. He wants a short-term view on the stock. Ashwini, your take on this one, GIC Housing?
See, again, housing had its heyday, and now with rates going up, financials may not have a very easy time. So having said that, again, these things are cyclical. One day inflation will start becoming soft and rates will start coming down. Well, he can build his position till that time comes in. If he's a short-term trader, then the trade has failed, he needs to get out.
Okay, one more question, Ashwini. This is from Twitter user who has Future Consumer shares. Now, he's got 40,000 shares of Future Consumer. Got in at a price of 40 rupees, so he's sitting on some nice money. And he wants a long-term outlook on the stock.
See, Future Consumer is in a very strong uptrend, and with a stop, say, closer to 54. And I'm giving stops because there's no fun in losing out everything that you made. So with that sort of stop, I think if we can get above 78, 80, you should be able to see 115, 120. So for the moment, hold on, but keep a 54 type of stop. Don't let it go below that.
All right, Ashwini, one quick query on the IT space. Some of these IT stocks have done well. MINDTREE, for example, last week was up more than 10%. You had TCS and the likes as well that did come back. IT is a theme that you would play, or it's heading towards the higher end of its range?
IT is just starting out. For last 3 years, it was in an accumulation zone, basically range bound. Now it's broken out. News flow is becoming positive, and stocks are making new highs. Even large caps are making new highs. That's a situation where you could do well. See, about this year, last year you had a big, massive green bar. This year, it's more likely that the range will narrow. So, which means Bank Nifty will not really perform as much. And if only IT is something that's going to work out on the upside, then the market would not overall move a whole lot, but IT could pull it in one direction and banks in the other direction. That could be the most likely scenario. So if people early on in the year can position themselves in IT, they'll be able to have a safer year.
Okay, point taken, Ashwini. Thanks very much for joining us with all those views on the stocks and, of course, the market itself. You have a great weekend. We will see you again on Monday. That's it from Nigel and myself as well. Good weekend to all of you. See you with the markets on Monday.